Hello, everyone, and welcome. I'd love to introduce you to Ronnie Sterfele from Incrementum and one of the authors of the In Gold We Trust report. And I'd just like to say New Zealand Bullion Depository is proud to be a sponsor again. The 2022 edition, Stagflation 2.0, is a great read. It's another big read. We're just under 400 pages. If you don't have the time to read 400 pages, the shorter version is a little bit more concise and a little bit shorter. Both of them are available on the Incrementum website or also on the NZBD website. Ronnie, good evening from me and good morning to you.
Hi, Michael. Good to see you.
Lovely to see you again. I'm going to jump in with both feet. Why hasn't gold been performing better in this inflationary period? Obviously, inflation's here, and the expectation is gold will be accelerating price-wise to combat it. Should we be expecting a rally in the gold price? And what would be the keys to look for, and what's the timing on that?
Well, I mean, we wrote 400 pages about that, but I'll give you my short summary. Well, I think it comes, to be honest, Michael, I'm not super excited about the performance of gold recently, and I'm getting asked this question, why didn't gold do better? Quite often, obviously. But we should not forget, and we shouldn't become too greedy. I think the gold price has stood up really well against collapsing equity markets. The MSCI World is down 20% year to date. So we are in a bear market. Many stocks are down 50, 60, 70%. The gold price has stood up against collapsing bonds. So, for example, Jim Reed, the strategist at Deutsche Bank, came out and says, this is basically the worst performance year to date in the history of the US bond market. And it has stood up really well against, collapsing crypto markets and especially against the very, very strong US dollar. And the US dollar is like a wrecking ball going through financial markets at the moment. So I think, if we take that into account in New Zealand dollars, for example, gold is up in the last 12 months, 14%. In euro terms, year to date, for example, we're up roughly 9%. In Japanese yen terms, we all know that back in the days, the Japanese yen was called a safe haven currency. Well, actually, gold is making lots of new all-time highs in Japanese yen terms, and it's up 19% year to date. So I would say that gold actually did okay-ish. Let's put it that way. Now, I think going forward, we shouldn't also forget that we started into the first quarter of this year. I mean, gold did really well. We almost hit a new all-time high also in US dollar terms. But then from mid-April onwards, we saw that the correction really started. And this was, first of all, due to the general brutal risk-off sentiment. And then on the other hand, also due to the fact that I think market participants started believing that, well, the Federal Reserve is serious about the rate hikes. So I think in April, the expectations for the Fed funds futures at the end of the year were like 2%. And now they're roughly at 4%. So I think there was a big hawkish shift in rate expectations. And this should be massive headwinds for gold. Also, if we have a look at the price of gold versus real rates, actually, based on that chart, and I think it's a very, very strong correlation. Actually, gold should be at least $200 lower. So my take, Michael, would be that gold is, and I'm not sure if I'm allowed to say that, but gold is calling bullshit on the rate hikes. Pardon my French, but I think it's really, I think that the gold price is already kind of anticipating and sniffing out that at some point the Federal Reserve will have to make this big U-turn before they really got going. But I mean, on a relative basis, they are doing a much, much better job than the ECB, for example. But I think this is really, I think once the Fed will say, well, okay, we have removed the punch ball, and the consequence was 35 trillion in wealth destruction in global bond markets and equity markets. And then, of course, on top of that, real estate markets, crypto markets, the art market, whatever. So a lot has happened. And this, I think, consumer price inflation versus asset price deflation, that's really, really crucial to understand at the moment. So I think gold has done pretty well, but it will really pick up momentum once the Federal Reserve signals, well, guys, here's the punch ball again, but don't take too much of it. I think this will really be the point in time when gold starts rallying again.
Depository provides safe, secure, discreet storage of precious metals for sensible investors around the world. If you would like more information on gold storage or New Zealand, please go to our website nzbd.com.